Yes, we can start now.
Okay. Good evening, Assalamu alaikum, and a very welcome all to our distinguished guests, industry leaders, financial profession, regulators, technology innovator, entrepreneur, participant joining us across UAE, Qatar, and around the world. This is Saeed Asizaman with you, your host. It's truly honored and privileged to welcome you to today's webinar on stable coins and tokenization, the next frontier of digital finance. This insight session is proudly hosted by Arif Technology in collaboration with our esteemed knowledge partner, the UAE chapter of ICAP member represented by Khushbu Mushtaq and the Qatar chapter of ICAP member represented by Usman Anwar. We sincerely thank both chapters for their continuous commitment towards professional excellence, thought leadership, and promoting innovation across the finance and technology sectors. Ladies and gentlemen, we are witnessing one of the most transformational shifts in the global financial history. The global cryptocurrency market has now approximately surpassed $4 trillion in market capitalization. And while the stable coin have, itself ecosystem alone have grown beyond 300 million US dollars, the highlighting the accelerating adoption of blockchain powered finance worldwide. Stablecoin has increasingly been used for cross-border payment, treasury operations, trade finance, remittance, decentralized finance services. In fact, stablecoin, your transactions volume exceeded 10 trillion annually, demonstrating that the digital assets are no longer a speculative instrument alone. They are rapidly becoming part of mainstream financial infrastructure. At the same time, tokenization is revolving assets ownership by converting real world assets such as real estate, sukuk, commodities, investment funds, and securities into global chain based digital tokens that can be traded more effectively, transparently, and globally. Governments and regulators around the world are now actively creating frameworks to support this transformation. A major milestone was the introduction of Genius Act, the guiding and establishing uh, national innovation of U.S. Stablecoin Act signed by the law by President Donald Trump in 2025. This landmark legislation established one of the first comprehensive regulatory framework for stablecoin in the United States, emphasizing full reverse reserve packing, transparency, consumer protection, compliance, and institutional oversight. The development signals that the stablecoin and digital assets are moving decisively towards the regulated global financial adoption. Here in Middle East, particularly in UAE and Qatar, we are witnessing remarkable progress. The United States, United Arab Emirates have emerged one of the world leading crypto blockchain innovation hub through regulators such as VARA in Dubai, ADGM in Abu Dhabi, the Security and Commodity Authorities, SVA, and the Central Bank of UAE. Dubai's Virtual Asset Regulatory Authority, or VARA, has developed one of the most advanced virtual asset frameworks globally covering stablecoin, token issuance, custody, exchange, real-world asset tokenization, and compliance standards. The UAE has also attracted major global players, including Binance, international fintech firm, digital asset custodian, blockchain startup, supported by strong government initiative, innovation-friendly free zone, and strategic national digital economy vision. Meanwhile, in Qatar is taking measures and strategic approach towards digital assets through the Qatar Finance Center Digital Assets Framework 2024. Qatar is actively promoting regulated tokenization of real-world assets while maintaining a cautious stand towards the speculative cryptocurrency and stablecoin. Qatar frameworks also allow innovations such as tokenized real estate, digital sukuk, asset-backed digital instrument, and blockchain-enabled financial infrastructure. The balanced regulatory approach position that both UAE future of regulated digital finance and blockchain innovation across Middle East. And also to help us better understand these exciting developments, I'm honored to have a lineup of distinguished speakers with us today. Our first speaker will be Dr. Farooq, a distinguished economist, thought leader, and expert in digital finance, blockchain innovation, and financial transformation. Dr. Farooq has extensive experience in advising, organization, institution on emerging technologies and their impact on the future of finance. Our second speaker will be Mr. Khalid Havaldar, a global respected authority in Islamic finance, fintech, sukuk market, and digital asset innovation. He brings decades of strategic advisory experience across international financial institutions and in widely organized by his leadership in Sharia compliant financial innovation. Our third speaker is Mr. Harley Zapino, an international recognized blockchain crypto lawyer from Australia with deep expertise in digital asset regulation, tokenization framework, crypto compliance, and blockchain legal advisory. His global regulatory insight will be especially valuable in today's involving legal landscape. So today's webinar will provide valuable insight in the future of, stablecoin and digital payment, the rise of tokenization asset, regulatory development across global market, opportunities and challenges for business and innovator, and how finance professionals can prepare for the next generation of digital financial systems. To all participants, thanks again taking your time to join us today. We encourage you to actively engage and participate in the discussion and makes this insight session. On behalf of Alif Technologies, the UAE chapter of ICAP member, the Qatar chapter of ICAP member, I welcome all you and wish you the highly informative, engaging, and inspiring webinar. Without delaying, I will ask Ms. Khushbu Mustaq to take over and start the proceeding. To you, Khushbu.
Assalamu alaikum and a very good afternoon, everyone. Thank you, Alif Technologies, for arranging and organizing this important webinar. I would also like to thank ICAP Qatar chapter for joining hands with ICAP UAE chapter as knowledge partner for today's session. And personally, I'm pleased to be a part of this discussion on stable coins and tokenization, a topic that is becoming increasingly relevant for all the finance professionals, businessmen, regulators, organizations, and investors as well. So thank you, first of all, Asif Zaman, for moderating the session. I think this, what you have highlighted, like stable coins and tokenization, these are real world assets, whether they are linked with payments, securities, sukuk, funds, commodities, and investment products. All of this is now becoming a part of wider financial discussion. Why we were happy to become a knowledge partner. So as ICAP chapter, our members, we are supposed to make sure that we upskill the knowledge of our members. So for our members, the key question which is relevant for this topic is not only what is this technology. The more important question is what does it means for our professional, our clients, our organization, the financial role of the finance professionals when it comes to this particular asset. So as you all know that these developments are bringing a lot of opportunities in the UAE, but at the same time, these opportunities will also bring responsibilities. Responsibilities for us as chartered accountants, for us as finance professionals who are consultants who are running the show of the finance. We need to understand that how these digital and tokenized assets are recorded. First of all, how they are valued, how they are audited, how they are controlled, and how they are regulated. Because at the end of the day, the governance, compliance, risk, management, transparency, everything lies with the finance professionals who are running the accounting and the finance of the businesses. So I think this topic is going to be very important, and this will give us the opportunity to learn from the experts like the esteemed speakers we have today and understand the practical implications, and then of course prepare ourselves for the changes that are taking place in the financial world. So thank you very much, Asif, and thank you for the speakers who have come up to explain us this entire I would say the most important topic that is going on in the world right now. And I'm sure this will be a very insightful and engaging session for all of us. Thank you very much. And I would like to pass on the mic to Mr. Usman, my fellow colleague from ICAP Qatar chapter. And I'm sure he will have the same things to say. Hello, Usman.
Hello, Assalamu alaikum everyone, and good afternoon. As you rightly said, everything has been well said. The only thing I want to add, the world is moving towards digitalization. So not only digitalization in the accounting processes and AI taking over, it's equally important for the transactional matters as well. So here comes the cryptocurrencies and other digital assets. When it comes to Qatar, Qatar has been a little bit restrictive in terms of cryptocurrencies, with the view that the speculative transactions are discouraged in Qatar. However, the Qatar government has been very active in digitalizing its economy, and the same way, uh, you know, things are progressing well to adopt some of the digital technologies and digital currencies, which can be non-speculative in nature. So we are good to see many developments in the coming years. As of now, uh, there is central bank digital currency, which is there in development phase, and it's available at the institutional level within the banks, but it has not been rolled out to the retail segment. So we are definitely looking more and more interest into digital assets going forward, and we are now looking to the experts what they talk about these tokenization and digital assets, and hopefully we have a lot of stuff to learn today. Over to Sayyid Asif Zaman. Thank you.
Thank you very much, Khushbu and Usman, and being a knowledge partner for us. And now I will request Dr. Farooq to take over from here and for the rest of the proceeding. To you, Farooq.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. And hello, everyone. And thank you so much, Asif, Mr. Asif, for basically the warm introduction and welcoming remarks. I'm going to have a small and very short presentation, inshallah. So let me just share my slides. Okay, I hope that you can see my slides. Yeah, can you confirm?
Yes, it's visible.
Okay, perfect. It's going to be a very short slide, but then what I'm basically looking forward that after the specific exclusive sessions, we will be moving forward to Q&A, and that's where basically we will have more interactive and discussions, and maybe if you have any questions, I will be more than happy to answer them, and other speakers as well. I will also highly encourage them to jump into the discussion. That will become more lively, inshallah. So, but before that, just to set the stage and to focus on the topic, I'm gonna go through the slides first, and then inshallah we will move forward to it. So I'm going to talk about stablecoins and tokenization. These are two phenomena which basically are part of blockchain and also the wider phenomena of digital assets and DeFi or decentralized finance. So, but we are going to basically focus on these two because what we have seen so far that particularly in this year and the year before, that these two phenomena and trends have been picked up by the institutions. And I'm going to talk about that how Islamic financial institutions can actually benefit from that. And not only it's about just adopting the technology, but I think that like it is very, very important for them to solve their own internal problems. Like Islamic financial industry is actually facing some challenges and issues. I'm going to talk about then how they can basically overcome these challenges and issues using these true trends, and then what would be the outcome, inshallah. So why it is matter right now, as Mr. Asif also has pointed out, that stable coins are now a major settlement layer with total market cap of more than $323 billion. It's not a very small size. It's a very big size, and it is growing very, very fast. And tokenization is also moving into regulated real world assets. We have seen tokenization of real estate, tokenization of gold, silver, precious metals, funds, commodities, bonds. Even in trade finance, tokenization is being used very, very widely right now. And what I see is that like Islamic finance cannot miss this opportunity, because not only because it feels the peer pressure and there is a competitive landscape, but also because what I have seen is that these two phenomena are very, very close to being Sharia compliance structures. So then if you look at from the Sharia lens, that what is stable coins and how they can be Sharia compliant, for example, it's basically we have to see that whether the reserve quality is good and Sharia compliant or not. Because if you are having, let's suppose, some financial instruments supporting those stable coins, which are not Sharia compliant or which are speculative, then of course, we will have a problem. So you need to understand that Sharia, when there is a Sharia requirement for having high quality reserves, it's also because to achieve stability. So in that sense, like we have to ensure that if there are cash, government bills, even money market instruments, interest-bearing assets, then we have to actually carefully structure them in terms of the reserves, number one. Number two, we also have to see that whether there are redemption rights attached to them or not, and how they can redeem those stable coins. Second, if there is a yield attached to it, any benefit, any reward. So are we basically having a riba in disguise or no? So that is basically a Sharia concern as well. And the trading rules is also very, very important, because if, and it is not basically an if, but I have done my research and then I see that like stable coins should be treated as currency and payment tokens, right? The Sharia rules on money exchange, in Arabic we call sarf, become very, very relevant. Like how we are going to do the spot exchange, possession and qabd is also another important factor where we have to fulfill the Sharia requirements of the stable coins, and also there shouldn't be any deferred exchange. And then moving forward to tokenized asset, also we have to see from the Sharia perspective that what does the token legally represent? Like in other words, like how it is being structured from the Sharia perspective. Is it ownership? I mean, like ownership of a physical asset? Is it a usufruct? In Arabic, we call it manfa'a. Or if it is a debt, I mean, Arabic, we call it dain, for example, receivables or fund units or rights like huquq, or merely a contractual claim. So like all we have to see is basically that what is the nature of that asset, underlying asset. And is the underlying asset is halal or not? We also have to see that. Is the income generating from that asset is halal? Is ownership enforceable and bankruptcy protected or not? We also have to see. And also the tradability also is important, because not all assets are tradable at premium or discount in Sharia. For example, in some sukuk, we have seen that some sukuk are tradable, but some of them are not. So we also have to ensure that if there is a tokenized asset, whether it can be tradable or not from the Sharia perspective. Now, if we look at the whole landscape of Islamic finance and particularly fintech, Islamic fintech, So we see that like Islamic finance has reached $6 trillion industry, and it has a year-on-year growth as 21%. And we are projecting that like by the end of 2030, it will reach to almost $10 trillion. Particularly Islamic fintech industry is also growing and showing some promising features. For example, the market size has already reached more than $200 billion. And we are expecting that by 2029, it will reach to $341 billion. Almost like 500 fintechs are also there. And recently, for example, like Facet has also raised $51 million in Series B, which is a very big achievement. So what we are seeing is that it's a very growing trend, but at the same time, there are some conventional problems or traditional problems with Islamic finance, in the sense that it is very much conventional. It is still a debt-based industry, where all the instruments are majorly tawarruq or murabaha. And although like there are some justification and discussions, I'm not going to into the details of those discussions. But what I'm trying to say, there is a still concern, a serious concern about replicating conventional finance in that sense. So what I feel is that stablecoins and tokenization can basically solve the issue of replication, in the sense that like when you have all the debt-based instruments running across all the major products, then tokenized sukuk and funds, fractional asset access can also help Islamic finance. And I think that there is a very recent report by Standard Chartered saying exactly the same thing, that like Islamic finance having a problem of the availability of high quality assets. So like we do not have good investment venues, we do not have high quality Sharia compliant assets. So I think that tokenization can actually address this issue. So, and then we also have Sharia governance and compliance issues, which can be programmable in these two phenomena. So what I will say that for the strategic implication for Islamic finance, like there is product innovation, we can have tokenized funds, sukuk, stable coin-based settlements, halal investment platforms. Sharia governance can also be upgraded at the level of smart contracts, wallets, custody, reserves assets, secondary trading, DeFi integrations. I have been working on these lines already in terms of Sharia governance, monitoring, and Sharia review, but I think that like it has to be upgraded to the level of institution as well. And we have to basically correctly do the market positioning. For example, rather than having like very asset light products, we can have asset-backed product with more transparency in Islamic finance. So if you look at right now how we can basically proceed with these two phenomena in Islamic finance industry, I think that we need a strong Sharia structuring, clear Islamic legal rights, for example, Sharia oversights and monitoring. And then there has a missing link with real economic utility. So I think that we have to actually connect this relationship of Islamic finance with the real economic activity. And we can have institutional grade governance as well in terms of Sharia compliance and Sharia endorsement. So thank you so much, and Jazakallah khairah for listening. Here I will end, and inshallah we can further discuss it in the Q&A. Barakallahu feekum.
Thank you very much, Dr. Farooq. Thank you very much. And I will request Mr. Khalid to please enlighten us about your knowledge about this all things. Thank you.
You're on mute, Khalid.
Thank you, Khalid. Yeah, my background is more institutional finance. The defining part of my career, I used to work for Moody's for 16 years, where I was global head of Islamic finance, as well as head of Middle East securitization. And look, it's worth highlighting that Technology is very exciting. It can do things faster, quicker, more efficiently. But when it comes to tokenization, the real world still matters in terms of the laws that you have. Like, I can put an asset on a blockchain, but if the court system in a particular country doesn't recognize that digital representation, you've just bought a digital certificate which has no value. So you still have to anchor tokenization in the real world of laws, which Mr. Harley, I'm sure, will cover fluently. In terms of its role in Islamic finance, those of you that know me, I'm not necessarily a huge fan of the way that Islamic finance, this 9 trillion figure that Dr. Farouk highlights, is going. I feel there's a lot of riba replication occurring within the industry. And part of that is because, look, it's very profitable, but also having asset-backed finance is hard. So once you can make an asset liquid and fractional and tradable on a settlement infrastructure like a blockchain, the possibilities for a more sincere form of Islamic finance become practical. And I think we always have to stay grounded in the practical versus the aspirational. And so I'm very excited about the potential of a new type of infrastructure that makes asset finance a reality. And in my own sort of experience, I'm also an investor. I used to invest in a lot of fintechs. Now I only exclusively invest in blockchain, Web3, AI companies because blockchain, distributed ledger technology, this is the infrastructure of the future. I think as important as the internet was, what was it now, 30 years ago, people couldn't envisage what the internet would do to banking and finance. I think this revolution will be just as powerful as that in terms of the implications. So if you think Islamic finance could have ignored the internet, obviously nobody believes that today. I think Islamic finance is always a bit conservative, a bit late to the game. And this risks the Ummah always being a laggard and actually renting our business on other people's infrastructure. So scholars like Dr. Farouk and others like Mufti Bilal and Mufti Faraz, there's a number of notable scholars who are helping to bring us into this space let's say, in a Sharia compliant way. And also many startups. Facet was mentioned, alhamdulillah, a great success. A stablecoin neobank, which has a Facet Islamic arm. Startups like Takadao and Marhaba Network, which I'm associated with. There are many startups in this space that are helping to build that infrastructure, but missing from this whole architecture, actually, the Islamic banks themselves, who are really the stewards of Islamic finance. You know, if we look at the success so far of Islamic finance, it's really the Islamic banking sector. I feel they've become very comfortable with the way they are and the industry that they are. And whereas the rest of the world, BlackRock, JP Morgan, Franklin Templeton, are all diving headfirst into this technology, I don't really see a very active stance from the Islamic finance sector. And that risks, 1.5, 2 billion people working in somebody else's value system. And I'll just close to say that, look, once this infrastructure gets built, economies of scale, efficiencies of scale become very powerful. And if you look at the multipolar world that we are living in today, it's important that communities that share values have infrastructure that can reflect some of those values. Otherwise, you will be vulnerable to the value system or the economic systems of a different type of actor or stakeholders. So just to close, a very huge opportunity for Islamic finance. I don't really feel we're doing enough. It's the startups that are really, I think, pushing ahead, but they're small and they cannot make a difference without institutions coming into this ecosystem. And I think that's enough for my opening comments. Back to you.
Thank you very much, Mr. Khalid, and it was very nice to hear so much things and knowledgeable information from you. Before we go to Harley, I was request the participant if they have any question, they can post on their chat board. Thank you very much, and to you, Harley.
How's it going, everyone? Nice to see everyone today, and thank you for the panelists that are joining today. So what I'm going to talk to you guys about is regulatory landscape. I'm going to try to be as entertaining as possible. I know it's a very dry subject, but everybody likes money, right? So I'm going to try to relate it to how you guys can make money, how you guys can take advantage of the opportunity. So please, hopefully you enjoy, and we'll go from there. So basically, what I'm talking about today is stablecoins and tokenization. I'm going to have a particular focus on the UAE, basically how to do it, what can be done, etc. And we're going to run through this pretty quickly because I only have 10 minutes. So basically, we'll start with stable coins, and particularly under the central bank of the UAE. So there's two different types of stablecoin regulations. One's under the central bank, and one is under VAR. So basically, the one under central bank, they call it payment tokens. And why the central bank payment tokens are so important is because they are the only stable coin in the UAE that is allowed to be accepted for goods and services. So if you want to make a payment, if you want to receive a payment, if you want to implement it into your business, a stable coin of some sort, you would need to accept the central bank payment tokens. Now, I'm not going to go through a lot of this dry stuff, how to get it, etc., the eligibility, capital requirements. All these slides will be available to you later to have a quick run through. But I guess the stablecoin in this aspect, especially for payments, so if you're a bakery, a food and beverage, retail store, etc., you can accept these stable coins as payments. But what needs to be made quite clear, things like USDT, USDC, doesn't matter what blockchain they're built on, you can't actually accept them as payments in the UAE, unfortunately, unless they decide to register themselves under the central bank. Now, central bank payment tokens, they're split up into two sections, dirham payment tokens and foreign payment tokens. So dirham payment tokens are the ones that you can use within the UAE ecosystem for goods and services. Foreign payment tokens, you can only use that in exchange for various virtual assets. So very important distinctions, very important for your business, very important for moving your business forward within the UAE landscape. Now, stablecoins under VARA, they're very similar to the central bank foreign payment tokens. So they're called fiat reference virtual assets. They can be issued under a Category 1 issuance license under VARA. But again, unfortunately, you cannot use them for payments of goods and services within the UAE. So basically, what they can be used for is, I guess, hedging as an asset, as a commodity, trading on various exchanges, on broker-dealer platforms, using for investment purposes and whatnot. But again, they cannot be used as a payment service or used to purchase goods and services. Now, you may say, what about crypto.com's card, etc.? I can use my crypto.com card to buy goods and services within the UAE. Now, Crypto.com's licensed under VARA, they're licensed under central bank. Now, why you can use your USDC and USDT to make payments on their card throughout the UAE is because it actually gets liquidated first. So you're not actually buying anything with USDT or USDC. Crypto.com's liquidating your USDT, USDC into dirham, and then you're actually making payment in dirham. So just to summarize that stablecoins under VARA cannot be used for the purchase of goods and services. You can get them issued, but they can only be used on various virtual asset platforms. Now, something a lot more interesting. So moving on from the stablecoin side is the tokenization under VARA in itself. So there's not really many jurisdictions where you can tokenize to this extent or that has the relevant regulatory framework for tokenization. Now, one of the coolest things that VARA has done, in my opinion, is the ability to tokenize various assets and back it by a particular token. Now, the most common one that I've seen throughout my career is the tokenization of real estate. Now, what this allows you to do, the asset reference virtual assets under VARA, is to tokenize any asset and fractionalize it. And you'll be able to put that and make a market of it on an exchange or broker-dealer. So why this is so important is because I think Khaled mentioned this previously, it's the creation of liquidity, being able to trade to traditional assets that won't be able to trade. And in the sense of real estate, it's actually easier to trade than your typical, I guess, traditional mechanisms like listing on a stock exchange or a retail real estate investment trust that requires a listing on a particular stock exchange. So real estate, for example, so this would be issued under a Category 1 license as well, similar to your VARA stablecoin. Basically allows you to do multiple assets. So real estate, sukuk, Islamic debt, funds and unit trusts, commodities, carbon and sustainability, receivables, trade and finance. All of this can actually be represented in a token and it can be traded as in a market. So you can actually make a market. And it's amazing because typically you could only make a market if you're a stock exchange. Now you can do that a lot cheaper, at a lot more cost-effective rate, and a lot faster and a lot more technologically advanced as well. So this, in my opinion, the tokenization under VARA is one of the most exciting things. And it's not just real estate in Dubai or UAE that you can tokenize. You can tokenize real estate globally. You can tokenize commercial property. You can tokenize gold, silver, anything that you can think of really that is not considered a financial product or service. Now, how an AVA gets licensed. So basically, how can you get licensed for the tokenized asset? So basically, you either need a Category 1 license under VARA, which takes about 12 to 18 months to get, I would say, or you approach a Category 1 license like Tokenvest or Control Alt, and they will be able to, and if you engage them and they accept you, they will be able to tokenize your asset. And this can be a funds, it can be, again, commodities, gold, silver, Pokemon cards, trading cards, whatever it may be, any asset, any real world asset, basically. So it's a very broad, it's an extremely broad piece of regulation and only available within the UAE, really. Now, what's also important is making a market in these assets. So basically, when you make a market in these assets, obviously it becomes a trading venue. You can trade it. There's liquidity, buy and sell. So I've heard that another company is tokenizing camels at the moment. So you can purchase camels and you can take a percentage of their yield. So we're getting a lot of these cool assets, and now these assets, there's speculation, there's buying and selling on markets. And now the markets are basically exchanges, licensed exchanges within the UAE. So particularly UAE VARA license and the UAE broker-dealer license. These are your two main trading venues for these particular assets. And you can do a lot more things with them as well. Lending and borrowing, completely legal. Derivatives, legal as well. You'll need to follow the relevant processes, but all these assets we can create lending and borrowing and derivative related assets, perps, etc. So very powerful, and yeah, it is very broad. Now, UAE is not really, in terms of stablecoins and tokenization, there are a few other jurisdictions. UAE is definitely leading, fortunately. So as mentioned by the previous speakers, the Genius Act is being implemented in relation to stablecoins within the US. So that's going to be a big market in itself. MiCA has its regulations, but MiCA's regulations are not as MiCA is Europe, by the way, for anyone that doesn't know. It's regulation in terms of virtual assets. They do not allow things like USDT because it's not 100% backed, which removes a lot of liquidity from the market. So it's not an ideal scenario. And then on the tokenization aspect, we have a Labuan, which allows for security tokens. They're not as prominent, and then I wouldn't say they're on the level of UAE at the moment, but there is mechanisms to actually tokenize your relevant assets and securities through Labuan. That's it today for regulatory speak. Hopefully I didn't bore you. Hopefully that wasn't too dry. If you have any questions, happy to answer them later. But yeah, I'll hand it off.
Thank you much, Ali,
Um,
and I will request Dr. Farooq to conduct the Q&A section. To you, Farooq.
Okay, thank you so much. Jazakallah khaira. I think that people have focused and heard our talks, alhamdulillah, very attentively. So we have got questions basically, and let them keep coming. So inshallah, one by one, we are going to deal with all the questions, inshallah. So starting with Khalid. So there is one question from Mr. Ashraf that do you see Islamic finance principles as an advantage or limitation for stable coin and tokenization adoption?
Look, whether it's an advantage or a disadvantage depends on what you're hoping to achieve. Because if you want to build a business and make lots of money, like let's bring it back to as Harley was saying, look, the existing riba system is extremely profitable for many people, and blockchain tokenization can just enable you to make haram profits in even faster ways than you could before. So it's important to realize tokenization, stable coins, RWAs, these are just tools. And the same way before, we have tools that are Sharia compliant and tools that are not compliant. You can apply the tool in your interest. Now, what I think is different is before, asset finance was hard. I used to be head of securitization. I must have seen over 90 transactions in the Middle East region. This was over an 8-year period. In that period, of that 90 transactions, maybe 6 successfully closed. Usually real estate related, because real estate is a very nice, simple asset class. And these were deals of a few $100 million each. So these were big deals. But so many more failed because the law is a complex animal in any country. And in emerging markets, it's typically more uncertain than in more mature markets. How does the law work? So if you have proactive regulation from people like VARA, from the central bank, who give you a very clear foundation around asset finance, digital assets, this, I think, can really supercharge a more sincere form of Islamic finance. So a very long answer to the question. It is the technology is advantageous if you want to build a sincerely more asset finance system. And this is something we haven't had in history. Thousands. So this is really a unique opportunity. And I really hope the Ummah and the Islamic finance sector can seize upon it because it is a huge advantage. It's something we never had before. And I hope the big institutions take advantage of this opportunity.
But Khalid, the question was, I also wanted to just I have a follow-up question that these tools are there. I agree with you. And I also see that like now we have a very unique advantage in the sense of like asset tokenization, like connecting Islamic finance or financialization with the real economy and economic activity. But do you see that like in doing so, we are going to be restrained through Sharia, or like do you see that like look, Sharia will basically complement and support these kind of initiative?
Look,
I mean, in a nutshell, also like let me just give you another angle. It's like, do you think that like Islamic finance in terms of tokenization is more restrained than conventional finance, or do you think that Islamic finance can basically exploit this opportunity, as you have said that this is the biggest and unique opportunity?
I'm hesitant to say because you are the authority, but look, by definition, Islamic finance is a constraint, and it's a good constraint amongst unethical practices. So it is a constraint, but I genuinely think an Islamic asset finance system that puts social justice, equality, inclusion at its heart will longer term be an advantage. But in the shorter term, having no restrictions is easier, right? And so having restrictions, so for example, most stable coins are backed by US treasuries. So your ecosystem is already 99% dominated by a stable coin backed by US treasuries. Now, if you have a very strict interpretation, this becomes a massive constraint on Islamic finance sector. So it is a constraint, and in the short term, it will be a challenge. But in the long term, I think you build a better, more sustainable system. The good thing is you don't have to choose right now. You can have complementary systems all running in parallel, and then the consumer can choose. Do I want this system, that system? So I think choice and competition is really where we are today. And let's just hope we can build a good alternative with the constraints that we have.
Thank you so much. There is one question for Harley, actually. So Harley, what are the biggest legal risks in terms of long-term stability and adoption of tokenized as assets or even stable coins? How do you see that? Like, what would be the biggest risks there? Legal risk, of course.
I think there's two big different things. I'll start with stablecoins. Stablecoins is AI trading, agent trading. I think it's definitely going to take off. So for example, funds and whatnot, no one trades manually anymore. It's all algorithmic, right? Which leads to, I guess, the movement in agents trading stablecoins. And interacting with other agents and whatnot. And some agents are shady players and some are not. So I guess the legalities in terms of AI and how far does an agent go and how much control do you need to put on your agent when trading? So for example, I saw an article the other day, one agent was asking another agent for information. So what happens when that information becomes insider trading? Because they've received information. Obviously, let's say I'm the trader, me as the user. I don't know what my agent is doing. So who is responsible? Is my agent getting in trouble? Am I getting in trouble? And do I need to put the constraints? So there's a big, huge legal mess there in relation to stablecoins and why it relates to stablecoins is because obviously your traditional markets cannot trade, your agents cannot trade your fiat currency as easily as what agents can. Agents can set up new wallets, hide money, do whatever they so choose. So I think that's one of the biggest legal risks in terms of stablecoins. And then moving on to tokenization is, I guess, in itself, what is being tokenized and where do we limit tokenization? For me personally, I'm hoping that tokenization does not get limited at all. I would like everything to be tokenized. But the other side of that is a lot of people want to tokenize, but they don't have the custody infrastructure. So when you tokenize an asset, that asset, and particularly if it's a physical asset, that asset needs to be somewhere. And I guess there's always audit risks, there's compliance risks, etc. So for example, a gold or bullion dealer, is that gold actually there? So for example, a lot of my clients, they're in the gold industry, they have problems with dealing with Africa, for example, and purchasing gold and silver and getting it into the UAE. And they don't know if it's there because they need to be on the ground. So things like that, I think, will become problematic in the tokenization industry. And I'm sure there will be solutions for it. And it's just how is it dealt with and when?
Mhm. Okay, thank you. We have another question from Haris from Malaysia, and he says that in the future, can stable coins realistically be used for everyday payments like buying food at a stall? Also, could you briefly explain simple examples of halal and haram transactions involving stablecoin? This question is towards me, so let me just give the answer to that. So first of all, of course, right now, even like we do not have to wait for the future. Stable coins are being used as payments for buying and selling different things. Of course, like there are specific stable coins which are recognized in one jurisdiction, not in another. For example, Harley in his presentation has rightly said that like Central Bank of UAE, for example, they have recognized specific stable coins. So as long as you are using those stable coins, this payment can be recognized legally. But out of the jurisdiction of UAE, then there are different stable coins which can be recognized as a mode of payment. And technically, there are payment systems and payment gateways which facilitate the use of stable coins. So then you can basically do the day-to-day transactions with them. And also, Harley also has mentioned about a card by crypto.com or Binance. They also have a debit card. So you can also use those instruments for the daily payments. So you can use these cards to make payments in cryptos for the specific things. Secondly, okay, briefly explaining what is halal and haram transaction involving stablecoins. So of course, one thing is when you are doing a transaction with fiat money, your physical form of money or national currency, so you only have to look at the subject matter, what you are buying, for example, because it is already understood that your national currency or fiat money is halal. So what you need to do is like whenever you are doing a transaction, you need to ensure that the goods, services are halal. In stablecoin, there is another layer of halal and haram, where you also have to ensure that the stablecoin you are using is halal, because there are some stablecoins which are halal and some of them are not halal. For example, some of them are completely riba-based. They have been issued through an interest-based transaction. So you cannot use those stablecoins, but then you can use other stablecoins which are halal. I hope that I have answered this question. So I have another question for Khalid, actually. So how can real world asset RWA tokenization transform traditional finance and investment markets in terms of, of course, like Islamic financial infrastructure and also investment markets particularly? How do you see that like RWA is going to change anything there?
Look, if you look at what most people have access to in terms of investing, you go to the stock market, right? You have basically equities. And so most people, if they have a private investment portfolio, are usually looking at equities. It's easy, you can understand, you buy shares in a company, and within some constraints, companies, there's Sharia screening, and you can decide if it's halal, haram, etc. There's a lot of non-traditional asset classes, like, for example, private equity or commercial property, or some of the projects I'm seeing are commodity financing in Africa, or SME inventory financing, or trade receivables. These are all asset classes that the average person does not have access to because they're complicated and they're illiquid. You're starting to see many of these projects try to come on chain and to create a liquid instrument that gives you a share of the SME trade finance yield, or the cocoa farmers, crop harvest advanced financing yield. You're starting to see some of these projects. So I think in the future, and if you bring in your AI portfolio Sharia compliant agent, instead of just looking at equities, it can then go across this entire asset class. The investable universe will expand massively. And I think building a Sharia compliant portfolio that is not just equity based will become much easier. Because look, not everybody wants equity risk. You want income sources. Maybe you want yields from pharmacy lease rentals. You can put these on chain. So I'm quite optimistic that as the infrastructure develops and you start to settle on some common standards for tokenization and corporate governance, as Harley said, due diligence, do the assets exist? Do the businesses exist? Once you start to get common standards and due diligence, I think these types of liquid asset markets will increase. And then together with AI agents, you'll just tell your agent, look, I'm a pensioner, I'm not working anymore, I'm focused on income and not capital growth. The AI agent will go execute and will rebalance your portfolio end of day to look at price risk and so on. So this time is coming. I think within 5 years, I think you will have retail agents, but obviously it needs to be regulated, because someone can give you an agent which then decides to buy all the fake crypto stocks or bad projects, and you can really abuse that system. So this is why regulation is so important, but I think it will become a game changer in terms of access to illiquid investments that were not possible before.
Thank you so much. I have another question for Harley. Like, tokenization of assets is making RWA tradable through tokens, as you mentioned. What is the core difference here in terms of legal, of course, compared to a company listing their shares on a stock market and issuing the token? What is the legal difference between the two processes?
Yeah, so I guess one step back is, what is the legal difference between the two? Is one is obviously you're trading an asset. One is particularly, I guess, a representation of multiple assets. So, for example, a company would hold multiple assets within their business, and that's what gives their value. Whereas in most circumstances with the RWA market or the RWA stablecoins is, the RWA tokenized tokens, they're basically they represent the asset in themselves, like gold and silver, one-to-one sort of thing. Now, in terms of the process, so the process is, I would say, significantly easier than a listing, than actually going through the listing process. So when I've done a few IPOs, and they are quite strenuous, and there's a lot of questions, there's a lot of back and forth. So basically, you'll need your prospectus, you'll need your lead investor, you'll need the relevant parties there. Whereas With VARA or with the process in itself, step one is to get your your category 1 issuance license. And that will allow you to issue tokens. Step 2 is to get the exchange license. Now, imagine being the issuer and the stock exchange. Now, getting a stock exchange license is not actually accessible to most people. It will cost you millions of dollars, whereas an exchange license under VARA will cost you maybe, I don't know, 500,000 USD. Now, add that with a category 1 license, you only get another 600,000, and you're basically a stock market. So you're doing your issuance, you're doing your exchange trading, etc. It's such a powerful asset to have, and any individual can actually get that license in itself. So I guess the biggest differentiating factor is here you can actually become the market and the issuer. And the process is probably less strenuous or less difficult than actually getting a markets license and going for an IPO. The due diligence is probably at the same level. VARA is quite strict with those type of things to make sure everything is there. But it just opens up a whole world of opportunity, especially with traditional assets and whatnot, that people could never do before. And I think it's a very under the radar thing that most people don't realize. Get a category 1 license, get an exchange license in the UAE, you're a stock market all of a sudden. That's amazing and that's huge. So yeah, hopefully that answered your question.
Yeah, thank you so much. There is one Sharia question that tokenization is very similar to Sukuk Islamic bonds. Can the Sharia and governance standards of Sukuk be applied to tokens? I think that this is referring to the IOFI Sharia governance standards, Sharia standards and governance standards. I would say that yes, they can be relevant, of course, but it doesn't mean that those IOFI Sharia standards or governance standards are focusing on tokenization itself. So I think that what we need to do is we have to improvise when we are applying those Sharia and governance standards in a different context, in that context of tokenization. And that's what basically I have been doing. That, of course, Sharia, IOFI Sharia standards and governance standards give you a direction, some base and foundational platform. But then what you have to do is basically improvise and see that like how you can basically fit them in the context of tokenization, decentralized finance, digital assets, etc., and even like for a stable coin. So they do not directly address these phenomena, but of course, like we can improvise. And that's what basically I have been doing as well. I think that we still have 10 minutes. So yeah, let's go for another round of questions. So yeah, I have this question, very interesting, although like—
Farooq, 1 minute. Sorry. If somebody want to ask a question live, he or she can raise hand and we can bring her or him on online. And there is question, I think, posted on the chat board also, and Quinn, both. You can look at it, Farooq, please.
Yeah, so basically I am right now focusing on the Q&A section, but so those who have posted their question in the chat box, can you please post them in the Q&A section so that like I can pick them up from there? It would be easier for me. So yeah. And okay, there is one question for Khalid actually. So like, how do you think that like this tokenization and stablecoin ecosystem can support Islamic green financing and sustainable halal investment initiatives? So like, do you think that like they can also add to the green financing and sustainable investment goals, or how do you see them? What is the carbon footprint, for example, of stablecoin transactions compared to traditional banking system? Is it lower? Is it higher? Can they be adopted?
So I think there's two parts of your question. The second part is easier. There's this huge criticism of Bitcoin mining. and how much energy it uses and so on, which is a bit misleading. In a lot of it uses, I think, more than 55%, 60% uses renewables and uses stranded energy or off-peak energy. You know, there's a lot of value additions, but the fair comparison is not how much the crypto uses. It's you have to compare it to the system it's replacing. So if an infrastructure, you don't need a bank full of 400 people with an office, with its AC conditioning as we have in Dubai, right? That financial infrastructure will actually be more efficient, I would say, from a sustainable environment when you look at the aggregate cost of the financial infrastructure, which includes a lot of ancillary physical costs. So that's one element. In terms of green financing, you still have the challenge of legality and due diligence on those green assets, etc. But it's actually the answer is a combination of all of these different answers that we've had. If you can take rainforest, attribute its carbon capture to a unit, make it tradable, you could then get trading in those markets, which could bring financing into green. But then you may end up, and this maybe goes more to the principle of social justice. If you then have mega corporations buying up all of the green assets for everybody else, so maybe you're not allowed to drive your car to the office because you don't have enough green credits, but mega corporations have bought up all of the green credits. So I'm a fan of liquid markets, and I think it can make more efficiencies into the green sector. But I think what's missing from a lot of these discussions is the social impact of the governance of technology, just more broadly, whether it's AI, blockchain, just because we can do something faster and more efficiently, what is the consequences for the community? What is the consequences for the population? What are the consequences for the environment? And this holistic thinking is something that we have in Islamic finance, but it's not really there in blockchain markets or crypto markets. It's all about capitalism, absolute neoliberal capitalism. And so green finance without the social governance, it could make it worse. If you have the social governance, if you have the efficiencies and ethics together, then I think it's an opportunity to do things better.
Thank you so much. And I have one question for Harley, for example, and in terms of regulatory perspective, what are the challenges that makes tokenization complex, in the sense that, like, how does the regulator manage the trail and stop money laundering and counter finance terrorism? So do you think that, like, it makes it, like, in terms of AML, KYC, and also with FATF, what do you think that is it a complex phenomena from the regulatory perspective, or is it helping them?
I don't think it's complex, to be honest. Obviously, once an asset is tokenized, we'll be able to trace most things. It's publicly available in most circumstances. So it's really that initial stage of where did the asset come from, what has been tokenized, etc. Now, you will always have KYC, you will always have your relevant enhanced due diligence on particular individuals. There's particular assets that may be subject to less or more AML than what would happen in real life. So I'll give an example. So Pokemon cards. Pokemon cards have turned into a huge asset right now. There is a lot of trading, but there is no AML and KYC at all. And I think a lot of people potentially use that to use for nefarious activities, to move money around, etc. Because there's no AML KYC, similar to art. Art is another example. Now, as soon as those particular assets get tokenized, all of that, the buy and selling of that on a particular marketplace, that is all subject to KYC AML. So I would say that tokenization is, in most scenarios, is actually strengthening the KYC and AML aspects and the regulatory aspects of a lot of assets around the world. So I don't think there is any further difficulties or further complications unless you compare it to its traditional in-person comparison. And obviously, if you appreciate KYC or you don't appreciate KYC, that's a big debate as well.
Mhm. Okay.
Farooq,
There is one.
sorry to,
Yeah.
Farooq, there is one more very important question which have been raised from time to time, and some people are asking me also. Just for the audience and participant that Farooq and Mr. Khalid Havaldar, they have been a part of the first Islamic DeFi coin, Maraba DeFi. They have been with that one. The people, they have asked the question, I received that one, which is the best jurisdiction to launch a coin or a token project? And if you have practical experience in this area, please share your insight and recommendation. This is for you and Mr. Khalid, who have been running, and maybe Harley can add on that one. We just to, for the audience also to that we have me and Farooq have conducted, I think, long before during the COVID with Labwan IBFC. We have conducted around 6 or 7 sessions on webinar on different on tokenization and other things like that. And currently we are working on ADGM and Vara also. To you, Farooq, so who is the best person to answer or in a bit basis this question? Thank you.
Mhm. Just one correction, and then I will start with Khalid actually. So Harley was also involved at the very beginning with Marhaba DeFi. So it was a pleasure basically working with this beautiful and magnificent team basically for me. I mean, I learned a lot from these two guys actually. So yeah, Khalid, you can start asking the question, and then I will go with Harley, and then at the end I will answer.
Actually, I think I would defer to the master in the room in terms of which jurisdiction to set up a token and a crypto, etc. This is more of a regulatory question, and this would definitely be Harley's domain. So, Harley, I'm just throwing it over to you, Chief.
No problem. Thanks, Khalid. So basically there's three, so it depends on your budget, I guess, first of all. You can set up in the UAE. UAE is very expensive to set up a token. The three jurisdictions right now is British Virgin Islands, Panama, and Marshall Islands. Why these three jurisdictions? Is because these jurisdictions do not have laws that prohibit the issuance of a particular token, and they are 0% tax jurisdictions. Obviously, there's other corporate tax problems, but put it simply, these three jurisdictions are where 99% of projects set up in, for the reason that it's completely legal to do so, and the 0% tax regime.
I think that Khalid, you can jump in to answer that question, not only particularly from the legal or choice of jurisdiction perspective, but maybe like from an investment and also from the finance perspective. Like as a being a startup investor, I think that you can take that angle.
Yeah. So look, as much as you might like those jurisdictions to issue those tokens, my background is more institutional corporate governance, and I'm typically a glass half empty person rather than a glass half full. And I would probably, I can understand why somebody would want to set up in a cheaper jurisdiction. But if the regulatory environment is stronger in a particular place, particularly with respects to consumer protections, and for example, if you have to have the minimum capital or these sort of constraints, you want to know that the company behind your project, if it's an RWA or something, that there's been some due diligence behind it. If I think about my life before at Moody's, you have a third party who is effectively doing due diligence on your behalf. So I would probably be thinking about some of these more mature jurisdictions. But also to do a bit of a plug for Marhaba, you know, and you know this, that the Sharia governance board of Marhaba, they do look at all of the tokens listed. Um, when using another wallet, and I thought I was buying a token and it was a fake token with the same name as the legitimate token. Um, the unrestricted wallets, it's a bit of a wild west. You really have to be on your toes. Whereas with the more mature ecosystems, there's some level of protections, whether it's regulatory or Sharia, you know, that I think the community can rely on. So yeah, I would probably tend to opt for mature jurisdictions, but you need the balance between the two. Just because a project is listed in one of these offshore jurisdictions, it doesn't mean it's bad. And just because a project is listed in a more mature jurisdiction, it doesn't necessarily mean it's good. So it's still a very immature space. It's getting better. But I would still say, as much as I am a fan of this technology, people really should still be cautious about the venue they are buying from and the jurisdiction, and just to make sure that you're comfortable with the risk.
Mhm. And I think that just to add my angle into the response is actually like the Sharia governance and Sharia compliance is basically something should be treated as a backbone. So normally what we do, from the Sharia perspective, what I do is actually not doing the rubber stamping of different products. And I think that Khalid would have also experienced that it's basically like we have to involve in the product structuring. So like from the ideation to the brainstorming session to the wireframing, then we get into a different aspect of product development itself, and then Sharia compliance, review, audit, and then only comes Sharia endorsement and certification. So we basically from the Sharia perspective, we also have to look at these things in terms of decentralized finance, stablecoin, RWA. All of them, they actually need this because, like I said before, that we have already said that fiat money, national currencies which we use are Sharia compliant. Uh, Although, like, I do also recognize that there are some debates about it, that how the fractional reserve system and credit creation works in an economy. Are there any Sharia issues there? I do recognize them, but if we are talking about plainly medium of exchange, then it is already settled. But if you look at the stable coins, for example, RWA, it's again a new creature, and we have to also look at the Sharia compliance of these. I hope that I have answered. I think that we
Farooq,
have
just
10 minutes,
yeah,
but
sorry,
I'm not sure. Yeah, but Asif bhai.
you know, it's just a quick thing is that one. I would like Mr. Khalid to just in 2-3 minutes that how was his journey, because in the Marabadi fight he selected a jurisdiction which he have already told that it's a basically you have to see that where investors are more comfortable, whether it's offshore jurisdiction. I think you got registered in Australia, maybe, yeah, if I'm not wrong, this Marabadi fight. So, so just give some our participant that how was your journey, you know, how you selected and how much comfortable you there, and how this process went through. Please, Mr. Khalid, if you don't mind.
Yeah, actually, look, Harley was the one who drove the listing. Look, I'm not a lawyer by trade. I know a lot about the law and jurisdictions, but again, these questions around jurisdiction and registration and all these things, these are best served by a qualified person. I can just comment in terms of Marhaba's journey. It's been a challenge because it was launched at the end of the sort of last bull cycle. And then we went through a very negative down cycle and then an up. It's a very challenging journey. So, from a business standpoint, servicing the Ummah on chain, it's a very early time, and startups have a challenging time, but nonetheless, the team continue to work hard. They are built a product that is used by many Sharia sensitive people on chain, and many projects have come and gone, but Marhaba is still there, delivering value. So I think, and look, I'm conflicted. I'm involved. I think obviously it's a worthy project and they've done well. But on the jurisdiction, I really couldn't comment on that.
Okay, I think that before we end, I would like to basically take a round of like 1 or 2 minutes maximum to have the closing remarks from the speakers, starting with Harley maybe. So like if you have like closing remarks, like 1 minute, please go ahead.
Yeah, sure. Look, I think stablecoins and tokenization are really the future of things. We're moving away from a degenerate blockchain space and moving towards an institutional based zone. And we see that with government adoption, we see that with institutional adoption. So and there are other blockchains that are coming out like Canton Network and whatnot, where HSBC has tokenized $450 million worth of assets on their chain. So it is definitely an area that's growing. It's definitely an area that's going to be around for the long-term future. So I'd highly recommend keeping up to date because TradFi blockchain stablecoins will be TradFi in a few years, to be honest.
Okay, thank you. Actually, we are having a lot of questions actually waiting to be answered, but unfortunately, we are running out of time. So I have to close it. I'm again really sorry, but what I can encourage you is basically if you have questions, basically please feel free to reach to our speakers, to myself on LinkedIn maybe. That would be a better option, and then we can have the conversation. Or maybe I would be more than happy to arrange another webinar again with the permission of our respected guests. So like maybe like we can have another webinar on a different topic. So yeah, but again, sorry from my side because like we are running out of time, so we need to respect that. Khalid, over to you, your closing remarks, maybe 1 or 2 minutes. Again.
Hello? Sorry,
hello?
Okay. Look, I will just close how I started. I think the opportunity here is absolutely extraordinary. I think this is the future of finance, the same way that the internet has become mainstream. Nobody cares how the internet works. We just know that it does. And every business, whether you are a clothing retailer or a commodity miner, you are all on the internet. It will be the same with distributed ledger infrastructure blockchain. And then when you add AI agents into this mix, you are talking about the agentic AI economy. And if the Ummah is not there, if Islamic finance is not there, it's an extraordinary loss to our community. And so everybody who's involved in Islamic economy should be thinking about this and how to put their business on chain, how to get on chain in a safe and secure way, and really to make sure that Islamic finance has a footprint in this space. I hope, inshallah.
Okay, inshallah. And
Farooq,
just
if you don't mind, yeah, please, Mr. Adam Khan is there. Take one person, just if time's allowed for 1 minute or 2 minutes. Thank you.
okay, no problem. Let me just okay, Adam Khan, can you go basically? You can unmute yourself and then ask the question.
Yes, I would like to ask one question related to an efforts which are related to the jurisdictions. I'm sorry I was a little bit late, but is there anybody in the market who is actually preparing a proper legal frame for complementary currencies within the Sharia format? Because with the Stable Coin Act in America and all other jurisdiction, we can see that the backing of the stable coins are heavily relying on debt instruments. So basically, my question is there any type of efforts going on in related to the legal frame creation independently from what is going on the national or state level, but compatible or in accordance with the Sharia principles? So that's really my concern and question
So
about it. Yeah.
I think that Khalid and Harley can jump in, but very quickly to answer, yes, there are few efforts. I have been involved with few projects where we are trying to issue Sharia compliant stablecoin. Actually, we have done that. And these Sharia compliant stablecoins are very, very successful, and in terms of adoption also, and in terms of like their commercial value. These businesses are, although like very, I would say like they are at a very early stage. They are startups, and also they are very few in numbers right now. So like, but I'm expecting that in the second half of 2026, and starting from there, a lot of parties are actually interested in having Sharia compliant stable coins. So we will see some good numbers of projects coming
And they are
into the
backed,
market.
and they are backed by the
So there are
what type
different,
of
basically,
instrument?
so the underlying asset are different. For example, like some of them are backed by gold, physical gold. Some of them are backed by Sharia compliant assets, which are digital assets, but not particularly gold or silver or precious metal or even currency reserves.
I see. Thank you.
So yeah, I think that that was my closing remarks as well, that Sharia compliance is quite important. And I think that starting from the second half of 2026, we are going to see some very good numbers of halal stable coins, halal RWA projects, and also some halal DeFi projects as well, inshallah. Over to you, Asif bhai.
Thank you very much. And it was very nice hearing from you, Mr. Khalid and Harley. And anything to add before closing, Usman? You have any comments, something to add on, please? Go ahead.
Thank you very much. It was a wonderful session, but for sure, it's as Khalid has rightly mentioned, it's a topic of future. It's a futuristic finance. So unless we will have a hands-on experience on all these things, we will be in some other world. Looking forward to learn more from the people around. And once again, thank you very much to everybody, Khalid, Dr. Farouk, Harley, and very particularly Saeed Asif for arranging this webinar. It's a great thing. Thank you very much.
I am very much thankful to distinguished speaker, respected guest, member of UAE and Qatar chapters of ICAP, ladies and gentlemen, as we come to the conclusion of today's Insight webinar on the stablecoin and tokenization, the next frontier of digital finance. I would like to extend my sincere gratitude to everyone who have joined us today, and I'm very much sorry that we could not answer a lot of questions because of the time restriction.
By the way, sorry, we are still getting some questions even right now.
Yeah, Farooq, but I'm very much sorry about that, because we have to, stay with the timing, and we may have a second series of, webinar soon on that one. And that, see, these things have been accelerated because of the Genius Act in United States, which have allowed, a framework, and then currently also $4 trillion, the market cap of cryptocurrencies. So I would like to express my deeply appreciation to the distinguished speakers, Dr. Farrow, Mr. Khalid Havaldar, and Harley Zipino. I'm very much thankful to you, and a special, thanks to the UAE chapter of ICAP member represented by Khujbu Mushtaq, and the Qatar chapter of ICAP member represented by Usman Anwar. So on behalf of Alif Technologies and our esteemed partner, we sincerely appreciate your time and participation. We're looking forward to welcoming again our future events and knowledge sessions. Thank you again. Stay tuned. Have a wonderful day ahead. Assalamu alaikum and goodbye.
Thank you very much. Assalamu alaikum.
Thank you so much.
Thank you very
Thank
much.
you,
Thank
everyone.
you very much. Take care. Allah Hafiz.